This is our weekend commentary for the ICT Mentorship for October 22nd, 2021. Alright, so we've got our inside day I was asking for. Well, not asking for, but outlining that I would rather see that today. And we have a lower high than the previous day, and we have a higher low than the previous day. So, how we open on Sunday, this is what I would like to see. I would like to see it open lower, come up a little bit, fill the gap, and then start to move down. That's what I'd like to see. Hourly chart, dollar index. Small little gap I mentioned yesterday. We should trade up into here. It hit once more here. And intraday as an upside objective after trading down inside of this imbalance and taking sell side out here. Overall consolidation, small range day, inside day. All right, you can see we had a small little Judas swing in here. Traded lower, deeper into that daily imbalance, as you can see, that blue shaded area. Took out sell side here, traded into the volume imbalance. Rallied up back into the old fair value gap on the hourly chart. Then back down into the middle of the range. Notice again, it did not take out the high of the 21st. And it did not take out the low of the 21st. So, inside day. The inside day usually sets up the idea of a large range day. But when it's forming on a Friday, it's not really all that impactful until we see how we open on Sunday. Preferably on an inside day on Fridays, we want to see a gap opening, one way or the other, higher or lower. And that gives us our next level of prognostication. Euro-dollar daily chart. Inside day as well. Higher low than that of on Thursday, and lower high than that of on Thursday. So, to me, I don't think it needs to come back down in any of this. And I want to see it wind up and make a run into the bearish order block here. Taking out relative equal highs, low resistance liquidity run signatures as well. So we have it again, inside day. It would have been nice to see it come down and like wick through all these lows and this low and then come off that aggressively. That would, in my mind, give a little bit more, I guess, strength behind the idea that we would likely rally going into Sunday and Monday's trading. But inside day on a Friday, during a consolidation week, which is what we're looking at here, typical. That's how I knew to call out an inside day today. Some of you are probably thinking, how do you know that? We're in a range day, and the last day of the week, nothing was really expected to deliver in terms of high impact, and low volatility was expected. So if that's the case, and it's the end of the week, inside day is most likely going to form a small daily range. 15-minute time frame euro dollar. Trading back up into the imbalance. Attacked the sell side below here, but still didn't take out the low over here. So overall, just a choppy session. Not a session that you would be wanting to trade in, obviously. And that's kind of like the hint of me telling you last night it's going to be an inside day. So don't have a lot of expectations for big volatility. British pound daily chart has some continued give back into this order block here. I don't know, frankly, I don't know what this pair is going to do. I mean, it might spring the life off the order block and run after these relative equal highs, maybe into this consequent encroachment of the wick we mentioned throughout this week. But frankly, I don't know. Okay, it could do more consolidation, or it could make a run for the buy side in here. Hourly chart, pound dollar. I mentioned if we get below this gap here, come back up into it as resistance, that would set up a selling opportunity to come back down in below here and maybe dig into this area and maybe even get so far as to take out this pool of liquidity there a nice little gap there. All of this is really efficient till we get into this area and the liquidity in here. So watch this area here. It might be an area to hit and sell off. That would be something I would like, as I mentioned yesterday. Pound dollar 15-minute time frame. Again, not really exciting. Midnight takes out short-term high here. There's your Judas swing. Breaks down. Nothing in here really all that exciting except for mean threshold multiple times. I like this one here. This low, this high. Sell side and down spot center efficiency. Comes back up in mean threshold of the bearish order block and closes in the gap. Then sells off. That one's nice. All right, your homework was the E-mini NASDAQ 100 futures for December 2021. And we were looking at this low to this high on a 15-minute time frame. If you have not done the homework, obviously, stop the video, go do that, and come back to this one. All right, let's take a higher time frame look at the daily chart. We had the old high back here, and the market had traded lower into this fair value gap between the high and the low, so we traded down into that. Consequent encouragement was hit there. So around the 15,300 level, that was a level that would have been expected on the daily chart. Dropping down into the hourly chart, you can see how we dropped down into it there. Notice that you can't get any context in this hourly chart without referring to that daily chart. On your own chart, add on the range of that fair value gap. I'm not showing you here because I want to show the clean price action at that order block. But this low right there, that is where it's trading into the consequent encroachment of the fair value gap. It rallies higher, comes back down in order block, so we have optimal trade entry. Buy side liquidity. It rallies, comes back up once more in here, touches the old high, and then springboards one more time higher. On a 5-minute chart, I want you to take a look at, we'll go to the 15-minute chart in a minute. Look at the lows, lower, lower, lower into that order block. So we're seeing lower prices into a bullish order block on the E-mini NASDAQ. We have lower low on the E-mini S&P. And then we have the rejection of a lower low on Dow. So that was our divergence that we look for at a key array. So the discount array here, bullish order block, it rallies, creates an imbalance in here, drops back down in, consequent encroachment of the fair value gap, and it rallies there, comes back down in, hits the old high, which is that red level here, and it rallies again higher. Back up onto a 15-minute time frame. This low, it rallies, small little fair value gap there, institutional order flow entry drill here, consequent encroachment there, and this candle right there, that's the 9:30 a.m. candle. So you can see it trading right back down into consequent encroachment, rallies, runs through the old high, which is that red level here, runs through it, and look what it creates right at that old high. See that fair value gap there? It drops back down into it, consequent encroachment, and again another time here, rallies, retraces, optimal trade entry here, buy side still here, and rallies. If you take your fib, and this is just for extra credit for yourself, this low to this high, you'll get optimal trade entry here. Do a standard deviation of -2, and you'll get within a few points of the high here. I'll leave that for you to discover on your own. Optimal trade entry, swing projection model, -2 standard deviation. It gets within an ear side of that high. Today, we saw the market come back up, close in all of this, rebounds to the bearish order block, sells off aggressively, taking out the low resistance liquidity run signatures here, and sell side taken. And that's going to be it for today. Enjoy your weekend, be safe, and I'll touch base with you on Monday.